All right, so we're live. We're live. All right. So let me see if people are joining up real quick. Give me 1 second. Let me get this YouTube link going. Hold on. It was. Hold on, guys. Give me 1 second, bro, because I wasn't prepared for this shit. Hold on. YouTube. Oh, don't tell me it's not gonna go live. Hold up. And by the way, guys, welcome everyone. Welcome everyone. Hold on, cause I'm trying to see if my YouTube starts up. Hey, what's good? What's good? Carnage. That's how yeah, that's how you say your name. What's going on, bro? What's up? What's up? Um. Okay, there you go. There you go. Okay, we're live. We're live. We're live. Perfect. What's going on, guys? What's going on? What's going on? All right, we're good. We're good. All right, here. Let me go ahead and put this out. Let me put this out. 1 second, guys. 1 second. 1 second. Alright, there you go. Alright, what is going on, everyone? What is going on? What's going on? I hope all of you guys are good. I hope all you guys caught the trade that I put out today. I did it both on YouTube, in the premium, on live trading. You know what I mean? Everyone should have caught the trade today. But the whole point of this class today is, okay, I'm not really going to go into too much detail of my strategy today. Like, I don't mean like too much detail like that, but I mean like I'm probably just not going to break my entire strategy like to the complete T today, because let me ask you guys this one real quick. How many of you guys are really understanding my strategy? Because I've done these classes for a while now, so I want to see if you guys really need that extra step or if you guys already understand it. Okay, so today, I'm not gonna lie, okay, perfect. That's really good. So today I want to do more of a trade. I want to focus more on the recap. You know what I mean? Like I want to do. Haven't you seen your strat yet? But I trade NQ2. Hey, bro, love to hear that. But here, if you do want to learn more about my strat here, let me give you my YouTube here real quick. And this goes for everyone in here. Of course, if you guys want to learn more about my strategy, what I do, what I trade, this and this and this, it's all here, guys. It is all here. But okay, so today, I'm not gonna lie to you guys. Do you go live in the premium almost every day? Not in this premium, not in the premium that you're in right now. I have my own thing. I'm not gonna lie to you. You can find all the information over in the Discord description. But anyways, right? Hey, and thank you, Nicolas, is his name? Nicolas? Yeah, with an O, right? Thank you, my man. Thank you. Yeah, no, I mean, oh yeah, I do every single day. Yeah, every single day at 10 a.m. EST, 10 a.m. EST. Yeah. Will this be recorded on YouTube? Yes, sir, it will. It'll be right here. All right. So guys, today I ended up catching 2 winning trades, one being a 95-point trade, which for the people in this Discord, you guys might not know because I did not put it out here, but I did put it out over in mine, with my members and all that stuff. And then after that, shortly after, we ended up catching another 200-point trade. Do I show will I show my screen? Yeah, let me do that right now. Hold on. Let me make sure everything's looking good. Let me share my screen. Okay, let me know if you guys can see my screen now. Let me know. All right, well, okay. Kim, if anything, bro, let me know. DM me or anything. I got you. But all right, guys, I am now screen sharing, right? So let me go over and go to my YouTube real quick. Let me make sure. Okay, yeah, YouTube's looking good, beautiful. All right, so guys, today, I ended up catching 2 really nice trades, and they were actually really easy. So once again, I did see that a lot of you guys, at least in the class right now, you guys are understanding the idea behind my strategy. And of course, understanding my strategy is not hard, right? It really is not hard at all, right? The only thing is that it takes a little bit of practice, a little bit of patience, a little bit of discipline, and all that stuff, right? So the class today is going to be more focused on the trades rather than the strategy itself. I mean, the strategy is still going to be there, but it's going to be like how do I explain this? Like, I'm just going to be showing you guys the trade. You know what I mean? Like, I'm not going to be breaking down everything like a complete beginner, because you guys already know how the strategy works, right? That's the whole idea on why I do these classes every day, right? Will you ever start your personal live account? I already have one. I trade on it sometimes. Not. I like trading more on my funded, though. But anyways, okay. So the trades that I ended up catching today, right? Which I'm about to break down right here. If you guys can look at my screen, I'm sure you guys can see my screen, and all that good stuff. So the trade that I ended up catching today, or the 2 trades that I ended up catching today, was an NQ. It was NQ longs for 200 points. You guys can see this right here. I'll go more on that later. And then during the pre-market, we ended up catching a 95-point trade, which I didn't put out in this server that you guys are pretty much listening to me right now. But I did put it on my mind. So I did end up catching a really solid 95 point trade, which looks like this. Same strategy, same everything. And I want to break this down more to you guys so you guys can really get like the practice behind it and you guys see how it looks like real time. And it's actually really easy. Right, so let's stop wasting time. Let's get straight into it. All right, guys. So let's go. I'm gonna review this one first, just as a little like to warm up a little bit. In today's class, I'm going to cover a fair value gap and I'm going to cover an inverse fair value gap, what you need to see to know if the chart is going to inverse, if it's going to play out off a continuation, and all of that good stuff. All right, guys? So, yeah. So, to start off, what pretty much what we're going to review right now is going to be a simple fair value gap trade. It's going to be quick, easy, just straight to the point. All right, guys. So yeah, this class probably won't be that long because I'm not gonna lie, guys. I have some stuff to do in a bit. So you know, what I mean, I still wanna put you guys on. But yeah, all right. Let's get started. Hey, what's up? M2. What's going on, my boy? What's going on? All right. So today, right off, or not even a right off open during London session, right? Let me see. We ended up catching this trade at around. Let's do like 9, like till here. Actually, do like till here. Okay, right here, right. So let me show you, bro. I keep saying right, bro. I catch myself every time I say it, bro. Anyways, so just to be like super sure, right? There it is again. There it is, bro. Let me do this real quick. How many of you guys are standing? Hold on, getting it slowly. Okay, I'm gonna do a little poll here, right? I'm gonna do a quick poll, guys, in the chat. Open up the chat real quick. I need to see how many answers actually come in, so I know what I should be teaching and exactly what I should be putting out. Guys, real quick, open up the chat. It'll be the live stream chat right here, and answer this right here. I need to see what you guys are understanding. I need to see where you guys are at, so I of course can teach you guys everything I possibly can. And if most of you guys do understand it slowly, then I'll go from there. Let me see. Let me show the results. Okay, beautiful. Okay, so most of you guys, 67%, 70% of you guys are actually understanding the strategy. Now, I want to be fair for everyone, and I want to teach everyone, right? So if you guys do not understand my strategy, not one bit, guys, I'm gonna go ahead and link a YouTube video that will help you guys so much, and I really mean it, a lot. It will be everything that you guys need, right? So if you guys are completely new to this strategy, you guys don't know what to look for and all that stuff, this is the link this video right here is a video that you guys need to watch. This video right here has everything, right? So if you guys are new to trading, to my strategy, to this and this and this video right here will be the video that you need. Now, for those that do get my strategy, this trade recap will make so much sense and it'll be so easy. All right, so let's get this started. Right? So let me ask you guys in the chat, because I wanna be testing you guys to actually see if you guys do understand it, right? So right off open, before you guys as you guys are opening the charts and before you guys trade, what is the first thing that we do, right? Before we start trading, let me see if you guys get it, right? What is that one thing that we really look for? Exactly, the drawn liquidity markings, right? If you guys don't have the drawn liquidity markings, you won't know exactly where the market is going to go to, nor what the market is currently doing, right? Exactly. So you mark out the drawn liquidity, right? So let's go ahead and do that, right? So what you do is simply go on the higher time frame, and you pretty much just want to get the complete understanding of the drawn liquidity, right? So you guys remember last class how I explained to you guys the bank concept, how they take out liquidity and then quickly flip the trend back down. Do you guys remember that? I hope you guys did at least. Let me see. Yeah. Okay. Perfect. So keep that concept in mind. Remember that concept because it's gonna be very important, literally right now. So what we're gonna do here is before the market actually started pumping up, you guys can see that we have a lot of drawn liquidity. Actually, not a lot. We have a good amount of drawn liquidity, right? So we have some right here. We have some right here. You guys see we have a rejection. We have some bounces right here, which creates drawn liquidity. We have another one right here. Another one right here, and if you guys really zoom out, right, because this zoom out will actually, does this strategy work for forex as well? Yes, it does, because we're reading the volume in the market, and you guys know the market runs off of the volume, right? So yes, it does work for any market out there. Yeah, and if you guys of course zoom out a little bit, you guys will see that we also have 447 right there, right? So the nearby liquidity, both to the upside and to the downside, right? This should be super easy to find for you guys, right? So what we have right here is the lowest point of drawn liquidity is at 19,447. Do you guys see why? Do you guys see why? Because if you really look at this right here, there is no other bounce in the market other than this 447 level. Do you guys get that part? Do you guys get that part? So we practically don't have anything under 447, and this is going to be very, very, very important. So if you guys go, for example, if you guys go on the hourly time frame, okay, if you guys go on the hourly time frame, you guys can see that the lowest point where the market bounced from most recently is going to be at 19,447. If you look at anything under, it's going to be very, very far away for the next level of liquidity. Remember that, guys. Remember this 447 level, because it's gonna make a lot of sense in a minute. And for the people on my YouTube, I'm talking to the Discord. I'm talking to another Discord because I'm doing two classes, like, you know what I mean, in two different platforms, right? So anyways. So now that the market, you know, the market is waking up. You know what I mean? It's opening up. We're in London session, all that good stuff. Now that we have the drawn liquidity, what do we want to do next? Right? Let me ask you guys. After you guys found drawn liquidity, what do you guys start looking for next? What's the next thing that you guys look for? How do you determine when the market is getting good volume? You just look at the what's it called? You look at the size and the speed of the candle. The trend, exactly, right there. The trend, right? It's first the trend and then the MSS. Link to the premium. Here. Just look at the description of my YouTube, and then you can see it there. You can see it there. Oh yeah, you can also check out my bio. Yeah. Anyways. Okay. So now you guys have the drawn liquidity in the market, which you guys wait. I don't know if I can delete mess. Don't promote it. Don't promote it, because that's, you know, that's a little bit. I'm not trying to do that. Anyways. So now you guys have the drawn liquidity down in the market. Once again, you guys find drawn liquidity by pretty much marking out every rejection or every bounce in the market. You're good, Brizzy. You're good, bro. Don't stress it. Right? So you pretty much mark out every rejection and every bounce nearby in the market, which creates drawn liquidity. So that's why I have all these lines here on the chart, right? And of course, we have 447, which is going to make a lot of sense in a little bit. So now that we have drawn liquidity, like you guys said, now we want to start looking for the trend. We want to see what the market is trying to do. We need to see the reasoning on why the market is in its current uptrend. So in this case, now that we know that the market is in an uptrend, we need to see, like, where can the market possibly reject from? And now that this is what we're looking for, we're going to be paying attention to these two levels up here. Right? We're going to be paying attention to 19,624 and 19,643. And I'm going to show you guys this why in a second. So I saw that someone mentioned an MSS model, and this is exactly what we're looking for, right? So here in this case, we understand the market is going up and we have drawn liquidity. So I'm going to give the market some more time to see how it reacts after it takes out drawn liquidity. Does it want to keep going higher? Does it want to form an MSS and go back down? You know, that's stuff that you guys want to be asking yourself before you guys look to take a trade, because you need to understand what the market is doing. So in this case, we can see right here that the market took out these two levels of drawn liquidity. So once again, the trend is bullish. There's a reason why the trend is bullish, right? Is an MSS market structure shift? Yes, it is. Yes, sir. So it's pretty much when the trend flips from being bullish to being bearish, or from being bearish to being bullish. Okay? So in this case, the whole reason why the market trend was bullish was practically to just take out the nearby drawn liquidity to ideally go back down. So what ends up happening here is when the market takes out drawn liquidity, you guys don't want to be rushing to take shorts. You want to be looking to see if sellers step up. If sellers step up, then that's going to be your cue to start looking to take shorts off a fair value gap, which I'll explain in a second. But okay, so in this case, I'm going to be paying attention to the 50-minute time frame. Right, you guys can see right here that the market went ahead and took out drawn liquidity. The market trend is bullish, but right now what we're expecting is, since we don't have any more nearby drawn liquidity to the upside, what we're looking for is going to be an ideal rejection back down, also known as a market structure shift. That part is very, very easy. I'm going to play the chart right now so you guys can see it. Right, so you guys will see right here. Let me see. Oh, right here. Right, so let me ask you guys this. Today's class is going to be more as like a testing thing to see if you guys are really understanding this. So when it comes to a fair value gap on NQ, how many points should it be to be a valid fair value gap? Let me ask you guys this. 40? Perfect. Right? So by looking at you guys are killing it. You guys are really killing it. You know what I mean? It's all making sense to you guys. That's what I like to see. Right? 40 plus, exactly. Right? So by looking at this 15-minute time frame, right? Let's kind of catch up here. Right? You guys can see that right off the 15-minute time frame, we have drawn liquidity. Right? We have the DOL right here. So we have DOL. Now, what ended up happening right now? Well, the market, once again, you guys see how the candles can't really hold above this. What's the point of 4x? I don't know what you mean by that. I mean, it's preference. It's whatever market you want to be trading. For me, what are points? Points is, okay, think of it as like a dollar, right? So one tick on for futures, it goes by ticks and points, right? So one tick is 25 cents. Think of it like that, right? And you guys know that 25 times 4 equals $1, right? When you're looking at the dollar, right? So think of the price right here. You guys see how it's like 19,624.50. That point 50 is 2 ticks because 25 plus 25 is 50. So 4 ticks is 1 point. Then the 1 point will be, you guys see this 4 right here? If it goes up to 5, it'll be 1 point. If it goes up to 6, it'll be 2 points, and so on. Do you get it now? Oh, like what are the points for the fair value gaps and forex? Oh, I don't know. I don't know for that. Because I don't trade forex. I wish I could tell you. I wish I could tell you. Anyways, okay. So in this case, right? So we have drawn liquidity up here. The market, you guys can see that the market is currently struggling to break above this level of liquidity. It's really struggling. The reason I say is because we have about 4 rejections off this level, right? We have 3 rejections right here, and we have a major rejection right here. So you guys can see that what the market is currently doing, or the banks in this case, right? The algorithm, what it's doing is it's sweeping liquidity one by one. It's stopping everyone out. The algorithm is getting filled, and it's pretty much sweeping liquidity. So what we're gonna mark this out as is gonna be a DOL sweep. So when the market sweeps liquidity, let me ask you this right now. When the market goes into liquidity, it sweeps it out. What ends up happening right after? What ends up happening if it sweeps it? If it sweeps it? No, bro. No. It doesn't go up. It doesn't go up because the market is already in a bullish trend. MSS. Exactly. Right. So Brizzy, in this case, the market is already going up. The reason why the market is going up is because it wants to take out these 2 forms of liquidity, which are really, really strong nearby. Right? Once it takes out the liquidity, it's not interested in going any higher. Why is that? Because there's no more liquidity above, unless it's like super far away, and you guys know the market is not gonna go all the way up here. It could, it really could, right? But ideally, it's really not. So what the whole idea behind this is that the market took out nearby liquidity, it swept everyone out, got them stopped out, and like I said, where there's a seller, there's a buyer. So when we're selling and getting stopped out, the banks are actually buying at the complete top from us. So once they get filled at the complete top, what's gonna end up happening is an MSS model is gonna start forming. So where does it start forming? Well, it'll actually be right here where the selling actually starts picking up. So I get a lot of questions. A lot of people ask me, let me see, what time frame is an MSS valid on? There's no time frame. It doesn't really matter. The time frame does not matter. As long as you start seeing the trend flip, that's gonna be when the MSS will go ahead and play out, right? So in this case, you guys can see right here that there's a lot of selling coming in, a lot stronger than before. So when you guys start seeing a spike in selling volume from a bullish trend to a bearish trend, that's when you know that sellers are taking control because the drawn liquidity went ahead and got swept, right? So this right here will be known as an MSS model because the sellers are stepping up. Is it possible it could bounce off previous a lower high than that drawn liquidity? The lower high will be known as drawn liquidity. So when you're looking to take shorts, you're gonna be targeting those. Wait. Let me see. Let me reread that. Is it possible it could bounce off the previous lower high than that drawn liquidity? So lower high is drawn liquidity. That's the thing. Trying to trade. Lower high, higher highs, higher lows, lower highs, lower lows. Those are all forms of drawn liquidity. That's how I find my levels of liquidity. So all of these right here, all of these what's it called? Higher lows. These are all drawn liquidity. That's why I have all of them. Nah, you're good. When would / did you decide it was time to jump in? College, I'm gonna break down right now, right? So right now what we're looking for, guys, is pretty much the confluences behind this trade. We're looking for confirmations to know that the trade is gonna go in our favor, right? So in this case, we have a lot of selling coming in, right? A lot of selling coming in after a bullish trend. This is signaling a possible market structure shift, where the structure of the market is shifting to going from bullish to going to bearish. And the reason this is happening is because the market already took out every level of drawn liquidity to the upside, which is these 2 levels. So once it takes out all these levels up here, what's gonna end up happening is selling pressure comes in. And just like how you guys answered, the 40-point rule for the fair value gap on NQ, what's gonna end up happening here is if you guys really measure the candle on the 15-minute time frame, you guys will actually realize that this candle is 45 points, making it a very valid fair value gap. So college, in this case, this is where your question comes through. So before I actually answer this, actually no, hold on. Let me do this a little bit more organized. Right. So what we're gonna do here is, and by the way, guys, let me know in the chat. Do you guys understand how to mark out fair value gaps and what they are in general and all that stuff? Because you guys need to understand this. You guys need to. In the meantime, let me mark this out. So the fair value gap would be just like that, right? The gap right here, the imbalance, the 40-point candle. Yes, can you show one more time? I mean, bro, that's gonna take super long. I'm not even gonna lie to you guys. Once again, if you guys, here, let me go ahead and see. It'll be this one. By the way, guys, if you guys don't understand the fair value gaps and you guys don't understand drawing liquidity and none of that stuff, guys, this video is the video you guys need to watch before you guys watch this class. Do you measure the wick to wick? Yeah, it is wick to wick. Yeah. But Jay, before you measure the entire, yes, because you do. It's not only the candle, it's the entire wick, and the entire candle, wicks included. But in this case, Jay, you need to make sure that the candle is 90% body. Like it's a 90% of the candle is a body candle. Do you get what I'm saying? Because if you're looking at a candle that looks like this, for example, like let's say that this candle right here, right, is a 40-point candle. The reason this is not going to work is because this candle doesn't have any active imbalances. They got filled because of the wick. But if you're looking at this one, this is active selling that has not been filled because the candle has not gone up into that price anymore. Do you get what I'm saying? So when you guys are looking for fair value gaps, you need to make sure that the candles look like this. They look like a full candle. Do you compare the 15-minute time frame and the 5-minute time frame? Yeah, I usually compare them. Yeah, usually, but I don't do anything more. If you're asking these type of questions, this video, no. There's nothing wrong with that. Some people, of course, are new. And if you guys are new, of course, this class will make the most sense to you guys, right? Can you show us how to measure the candle again? Of course, right? So let me see. So if it's just the wick, it doesn't count. No. So for example, like this, right? Let's say for example this candle is a 40-point candle. It will not be a fair value gap because of the massive wick, right? So the body of the candle has to look like this. If it doesn't look like this, it's not valid. And the way you measure the candles, guys, is on TradingView to the complete left where it says measure right here. You're gonna go ahead and click on this, right? I suggest you guys click on the magnet and put a weak magnet, right? And then you click the top to the bottom, and it'll give you the point system right here. So 45.75 points. On NQ, anything more than 40 points is a valid fair value gap. Okay? So now in this case, now that we have the bias in the market and we have our entry model, the setup is done. All we need to do is wait for a retracement, followed up with a rejection. After you get that rejection, that's going to be your cue to go ahead and enter. And before I say the answer, when you guys enter off a bearish fair value gap, where would your price targets be? What would your price targets be? Let me see if you guys know that part. What would your price targets be? Let me see. Let me open up my YouTube chat. Was this during London session? Yes, Matt, it was. This was during London session. Price targets will be the nearest drawn liquidity to a downside. Exactly. So look, you guys are really understanding it. Exactly, the next level of liquidity. You guys see how simple this is? So, okay, let's catch up here. Right? So in this case, we had drawn liquidity. We took out drawn liquidity with the drawn liquidity sweep. We formed an MSS model showing that sellers are stepping up after buyers had the trend. Right? So with sellers stepping up and us taking out drawn liquidity to the upside, our next drawn liquidity will be the ones to the downside, meaning that the trend is going to go from being bullish to being bearish. Right? How do you choose a stock to trade? I trade the same one every day, which is going to be NQ. Right? But alright guys, now that we have the bearish trend, all we need to do is look for a bearish setup. Right? With the bearish setup, all we're going to be looking for is a simple bearish fair value gap. There's two ways. There's two things you guys can actually do. You guys can either, if you know that the market is going to go down by using MSS and drawn liquidity sweep, right? What you guys can do is actually either look for an inverse of a bullish fair value gap, or you guys can look for a bearish fair value gap followed up with a retracement into it, then another rejection. And I'm going to show you guys that right now. Are 4 ticks one time the amount of the contract? No. Okay, so for the people that don't understand what contracts are, there's two types of contracts. There's a micro and there's a mini. One micro is 1/10 of a mini, meaning if you on NQ, one mini per point is $20, right? So if NQ goes from 19,586 to 19,555 or 585, my bad, you will make $20 with one contract. Right now, if you're trading micros, that means it's 1/10 of a contract, meaning you're gonna be making $2 for every point that it goes up or down, depending on where you're in. And then of course you could do the math depending on how much you're gonna size and so on. And if you do need help behind that, here, let me give you guys the website that I use to actually do the math on how much I'll be risking per trade and so on. Let me see. There's a delay in the morning live trades but not educational class. Yeah, because I mean there shouldn't be a delay in the classes. There's no point of there being a delay. Bro, are you gonna do a regular trading like this on the regular? What do you mean by that? I do trading like this every day, David. Anyways. But alright, guys. So now that we have all the confirmations behind this trade, all we need to do, because now we know that the market is going to go down, and we know exactly where the market will go down into. It'll be into all of these levels of liquidity, because these are all the points where the market bounced from, creating liquidity. Okay, so how do you enter off this? I know, Connage, you were asking me about that, right? So all you guys want to be looking for is, once again, we know that the market's going down. We know it because we swept on liquidity and we're forming an MSS, and we have room to go lower and to draw liquidity below. So we know that the market's gonna go down. At least that's what our model is telling us. So in this case, all we're gonna be looking for would be a movement that looks like this, for example. Something like this. We retrace into the midpoint. It can be anywhere inside the fair value gap, but your ideal entry point will be anywhere from the midpoint. So let's say, for example, it would look something like this, and then you target drawn liquidity 1, you trim some off, boom, boom, boom. The trade is done, just like that, right? So that is the ideal right now. Okay, so what we're looking for here would be a simple retracement into this fair value gap, like I said right now. So let's go ahead and see when should we enter, right? Let's see if we retrace into it. Boom, right here, right here. So in this case, you guys can see that for sure the market could have dumped like crazy, but as long as not one level gets taken out, that means that the market still has room to go lower. So that means that the market, you know what I mean, you can still take shorts and not have to worry about the market sweeping you out and, you know, stopping you out. Right now, if the market takes out liquidity first and it goes into that bearish value gap, it probably won't play out. It will probably just inverse the bearish value gap and target drawn liquidity to the upside, because it already took out drawn liquidity to the downside. You guys get what I'm saying? So in this case, sure, the market could have dumped, and sure, the market could have been right around the corner from drawn liquidity, but it never went into it, meaning that the market still has room to go lower, at least into 543. So I told everyone in the morning in the chat, I'm like, guys, I'm not gonna lie, NQ shorts here, NQ it looks really bearish to me. I would say we have a room to go into 543. Right? How do you draw the channel? What channel? What do you mean? What do you mean? What do you mean the channel? Do I trade gold? Nope, I do not trade gold. I've considered it, but I think NQ is my thing. You know what I mean? NQ is my thing. I'm cutting out. If I'm cutting out, just restart the stream. It'll fix. Anyways, okay. So let me see the fair value gap. Oh, it's really easy. So on TradingView, you're gonna see a brush right here. Fix? Okay, perfect. Alright, on TradingView, you guys are going to see a brush right here. Double click it, click on rectangle, right? Put your rectangle on your chart, double click it, click on style, turn on middle line, and extend to the right. That's all you guys need. These are my settings for the fair value gap. And that's it. And then, of course, you mark out your fair value gap just like that, from the complete top to the bottom, just like that. And now that the market is retracing into this fair value gap, you don't enter yet. You guys need to wait for the cherry on top. How do you wait for the cherry on top? Well, it's actually really easy. All you have to do is wait for a retracement. After you get the retracement, of course, since the fair value gap is bearish, what you guys want to be looking for is a rejection. Once you start seeing that rejection, it shows you guys that sellers are stepping in where they're supposed to be stepping in. Once you start seeing that selling coming in, that's going to be your cue to go ahead and enter shorts. Right? So in this case, what we're looking for is, you guys can see right here, let me see, the candle went ahead and retraces to the fair value gap, but we're not going to enter just yet. We're going to wait for the next candle to see if the next candle actually has buyers or sellers. In this case, you guys can see that this next candle actually had sellers. So where you're going to enter at right here would be just like this. So I would enter personally like around here. I would wait for the rejection, right? And I would place my stop loss at the complete top. This would be your ideal stop loss, right? Then you're going to go ahead and target liquidity just like this, right? So the way the trade is going to look like would be like this, right? Oh, wait, actually, hold on. It would be okay. I'm not gonna lie to you guys, cause I don't remember if I took it after this candle, if it after this candle, cause we never got stopped out on this. It was probably after this candle right here, right? But in the most case, when you guys are looking for a fair value gap projection, you would look for a candle like this, and you'll place your stop loss at where the market rejected from. In this case, I'm pretty sure we saw the trade a little bit late, so we entered off this one. Let me double check with you guys. Hold on. Let me double check. Let me see. Oh, yeah. Okay, it was this high. It was this high right here. You guys can see the high right there. It was at 614.50. That was when we entered that was when we placed our stop loss. My bad on that. So it was 16 right there. So 614. Because what you guys want to be doing is waiting for the rejection once you start seeing a lot of sellers stepping in, that's going to be your cue to go ahead and enter your shorts, right? My bad on, I kind of, mistook it a little bit, or I did a mistake or whatever. It kept rejecting the fair value gap. How do we know that it's going to continue lower? You know this because when the market actually starts breaking or creating lower lows, in this case, since it's a bearish trend, you're going to be looking for lower lows to start being created. In this case, you guys can see that we broke out of this structure, right? And we broke this low. So where you guys would be entering, or where I entered, would be right here, right? So I would have entered around 598, 590, 597, around that range, right? So you guys will enter just right here. You place your stop loss at where the market rejects from, which would be at 16 or at 614.50, and so on. Let me see. Hold on. Okay. Do you buy calls and puts, or is there another way to short the stock? This is not a stock. It's an indice. It's you either long it or you short it. It's not a stock though. I don't trade stocks. I do futures. Anyways, so now that you guys are seeing that the market is finally rejecting out this fair value gap and we're breaking out of the structure, you guys will enter when the market breaks below the low right here, right? So we went ahead and entered our fair value gap, or our NQ shorts right here, and we targeted drawn liquidity down here. What ended up happening? Well, peep this, guys. Peep this. Peep that, guys. Resulting in a beautiful 95-point trade, just like that. Right now, this breakdown, it's not the cleanest, and I definitely want to show you guys how I caught this 200-point trade, which is going to be even better. So this trade is going to be better, and I'm going to break that down right now. Right? So let me catch up with the chat. Do you not place your stop loss at the top of the fair value gap? No, I place it at the rejection. It just makes more sense. It makes more sense. Red and green box tool, it'll be this one right here. Double click it depending on if you're entering longs or shorts. In this case, we entered shorts. You're gonna click short position, place your entry, place your stop loss, price targets, boom, just like that. Now, let me ask you guys this in the chat. Did this? Hold on, bro, because let me see something. Okay. Let me ask you guys this in the chat. If there is no drawn liquidity, there was. It was right here. You place it. Okay. When you guys are, here's the thing. When you guys are trading regular fair value gaps, you guys will always place it after the market either bounces or rejects off the fair value gap, right? So in this case, when the market is rejecting off the fair value gap, you will place your stop loss at the highest point where it rejected from. In a bullish fair value gap, you're gonna place it at the complete bottom where the market bounced from. So in this case, since we're looking at a bearish one, we're gonna be looking at this one. Right? Now, let me ask you guys this in the chat. Did this breakdown make sense? Was it alright? Was it good? Was it, questionable? Let me know in the chat. I'll take some feedback. I can always yes, very good. Okay. So look, guys. Look. I'm gonna give you guys a way better breakdown right now, because here I can actually show you guys exactly where I entered from. Why does the fair value gap have two candles in the middle? What do you mean? Like oh, no. On the 15-minute, the 15-minute time frame had the fair value gap. The 15-minute right here. Yeah, so my bad. The 15-minute. Yeah. Okay, how can we know where it will target? Didn't get it? You do that by looking at drawn liquidity. Now, if you don't get that part, here it is. Let me see. Hold on, let me put this right there. Okay, it'll be right here. And I got you. I got you, Wolf. I got you. So, Arvin, right? That's your name. I hope that's your name. Here, if you don't understand that part, watch this video. It will make complete sense. Now, guys, let's stop wasting time. Now, do you guys remember the 447 level that I showed you guys? On the 1 hour time frame, this is the lowest possible point that the market has gone to nearby. So what I'm going to do is I'm going to delete all of this. Just like that. Boom. Okay. So it's going to be a fresh new chart. Now, let's go ahead and look. Okay, do you guys remember this 447 level? Trading tomorrow? Yeah, I will be trading tomorrow. Yeah. I will. Now, with this 447 level, it is so important. This level was the most important level today. And I'm going to show you guys exactly why. And it's so simple why. Right? So, now that we know that the market is targeting drawn liquidity to a downside. If you look at the 5-minute time frame, we know that the market trend is bearish. Main reason being is because we swept drawn liquidity. There is no reason for the market to be going up. So, if the market trend is bearish, let me see, if that fair value gap would have inverse, would you have entered longs? No, I would have gotten stopped out. There's no reason to enter longs there because we never took out liquidity to the downside, right? And I'm going to explain to you guys right now how to trade an inverse, right? By using today's trade that we caught for 200 points. So in this case, let's go ahead and see. So you guys know that the market trend is bearish. You guys know why the market trend is bearish. It's because it took out drawn liquidity to the upside, and then now it wants to go ahead and take out drawn liquidity to the downside until every single liquidity is filled. So right off open, you guys can see right here that the market went ahead and boom, it just took out drawn liquidity just like that, right? So in this candle, right, we took out drawn liquidity. Now, the whole reason why I was so bullish right off open, and you guys, for the people in the premium, right, or for the people watching my live trading, you guys saw exactly why I was so bullish. Now, let me break down why. So by looking at the 1 hour time frame, if you guys really try to find drawn liquidity, you can't, right? There's nothing below 447. There is nothing. If you guys really zoom in, guys, look at this. There is no, if the market goes below 447, there is nothing that you could possibly target nearby to target drawn liquidity. So what does this mean? What does this mean? Well, what this means is that when banks are taking out drawn liquidity, when the algorithm is taking out drawn liquidity, and bro, what do you do? Live trading? I do it over in my group, but I also do it on my YouTube. So I'll be right here, right? And then if you guys want to see the live trading from today, it'll be this one. It'll be this one right here, right? Now, guys. So when the algorithm can read that all of the big orders have been filled and there's no more orders to the downside. Look, here, let me word this better. When there's no more liquidity to the downside, the algorithm is not interested in making the market go any lower, because if it goes lower, it can't fill any positions. You guys get what I'm saying? There's nothing to buy from because there's no liquidity down here. It's just green candles, right? So the lowest point that the algorithm can possibly take the market into is 447. Does this make sense to you guys? Does it make sense? Somewhat, a lot, not at all. Let me know, guys. Let me know. Yes, sir. Perfect. So, guys, once again, if there is no more drawn liquidity to the downside, the algorithm is not interested in making the market go any lower. It's that simple. So, when I noticed this and I saw this in the chat, I'm like, guys, look at this. Hold on. Matter of fact, let me show you guys. If I pull up the commentary channel, I went ahead and told everyone. I'm like, okay, so looking at the hourly time frame, NQ has drawn liquidity at 447 that just got taken out. If you zoom out, there is no other level that the market could possibly want to go any lower. So what does that mean? Well, in this case, it needs to go up. It's not interested in going any lower. So what does this lead to? Well, what it leads to is the market being bullish, right? Easy, super easy. Just like how you said, it's easy, right? So now that we know what the trend is, okay, let me ask you guys this right now. Now that we know what the market wants to do, right, before we take any trade, what is the one thing we need to mark out to understand where the market will go to? What is the one thing we need to mark out? Let me know if you guys know in the chat. The one thing we need is not an entry. No, it's not the setup, right? Before you guys find the setup, if you guys know that the market is going to be going up, to where? Exactly. Draw on liquidity. Exactly. Now, guys, look how easy this is, right? So now that we know that the market is in a downtrend, what you're going to be doing is marking out every high the market created as it was going down. So let's go ahead and find them. So the highs you find, the way you find these highs is going to be up here, right? We're going to have, first of all, it's going to be this rejection, right? You guys see the market sold off, pulled back, sold off again. So this right here is drawn liquidity. Now, you guys see right here, market sold off, pulled back, sold off again. Boom, drawn liquidity right there, right? Once again, market went up, right? The market was in an uptrend, right? Highest point has been to, and it dumped, right? So we have the highest point, we have a lower high, and we have another lower high right there. So these three levels are draw on liquidity, right? So now we know that the market is trying to go up. It's not going up just yet. It's trying to, right? What we're going to do is we're going to be, if it does go up, right, before we look at the setup, we want to know exactly where the market will go to, right? Because if the market goes up and it takes out drawn liquidity, we can't really be looking for any more setups because we're running the risk of the market reversing on you, right? Because it already took out drawn liquidity, right? So in this case, let me try to test you guys because this setup was a little bit tricky. What possible setup do you guys see right here, right now, to enter? Because I know this is a little bit tricky and a lot of you guys were confused when I took this trade and I made it clear. Now let me ask you guys this. What the inverse exactly, Carson. Exactly. So do you guys see it? Before I mark it out, do you guys see the fair value gap? Bro, you are beautiful. Yes sir, bro. You are. But do you guys, let me see. Do you guys let me see. Okay. Do you guys see where the fair value gap is? Yes? Perfect. Okay, guys, look at this. So, once again, the 40-point rule, the 40-point rule on NQ, right? Anything more than 40 points in one candle is going to be a valid fair value gap. Now, we're going to go ahead and measure this candle right here, right? This 5-minute candle. If you measure from the complete top to the bottom, it's a 55-point candle, right? Now, you guys might be questioning, like, where's the fair value gap here? The candle looks big, but there's no gap. There actually is. There actually is. If you really zoom in, there's a very small gap. This gap, I don't trade it, but with this setup looking so good, I'm like, okay, I have to take this. Right? So the gap is gonna be this very small gap. You guys might be like, bro, what are you talking about? Like, there's no imbalance there. There is. Very small imbalance, right? But it's just enough to get you that good entry. So what you're gonna do here, right, is you're gonna wait for drawn liquidity to sweep. Once drawn liquidity sweeps, once you guys start seeing buyers step in, and we inverse this 5-minute fair value gap, that will be your cue to enter longs, right? So it's gonna look like this, guys. Look at this. Boom, just like this, right? Let me ask you guys this real quick, because I recorded this entire trade live. Do you guys want me to pull up the clip and show you guys exactly how it looks like real time? Would you guys want that? Yeah? Okay, bet. Am I recording this? Yes, I am. Okay, guys, peep this. Watch this. Hold on. Look at how insane this is. Look at how insane this is. Look at this, guys. Okay. So we took the trade. Let me see if it was right here. Okay. Look at this, guys. So peep this. You guys can see that right here, the market went ahead and took out liquidity, right? The market just took out liquidity. It took it out at 447. When we took out 447, there is no room to go lower because we know that there's no drawn liquidity to the downside. So what are we waiting for? What we're waiting for is going to be a simple, watch this. Look how strong buyers look. Right? This right here tells you the story. This candle right here tells you the story because we took out drawn liquidity and buyers are getting control so fast. Look at the size of the candle. Look how strong buyers look. It's a complete red candle to a green candle. Look how strong they look. Right? So I saw this, right? Once we inverse this fair value gap, just like that, I'm like, guys, I am in longs. Look how strong buyers look right here. This candle right here tells us the story behind everything. Right? You be telling us a fair value gap is about to form before it does. How do you know that? Bro, I guess I just know everything. I just know everything. No. It's pretty easy to read. I'll show you that in a second. But anyways, guys, do you guys see what I'm saying? We swept liquidity, buyers are stepping in, we're inversing a bearish fair value gap. So what you're gonna do here is enter right here. And I told him, I'm like, guys, I'm in longs. Right? Look at this. I told him, I'm like, guys, I'm in longs right now. Right? So I put my stop loss, of course, since we don't have any nearby rejection, right? I'm not gonna be entering up here, right, to set my stop loss down here. That's insanity, right? So what happens when you don't have a nearby a stop loss? Well, it's actually really easy. Just use a mental stop loss. For me, my mental stop losses are 20-point stop losses. So I usually set my stop loss when you guys see 20 points right here. This is where I place my stop loss when I don't find one, right? So in this case, since we didn't have one nearby, I'm like, okay, I'm gonna risk 20 points. You know what I mean? If it plays out, it does. If it doesn't, it doesn't. Whatever, right? Now we're gonna go ahead and target PT1, PT2, PT3. Now, why is this trade playing out? Let's go ahead and check this out. Let's go ahead and see. We have drawn liquidity, right, from the 1 hour time frame. You guys remember 447? We have drawn liquidity, right? We swept drawn liquidity right here. Drawn liquidity sweep, right, just like that, guys, just like that. Now to get the entry, oh wait, before the entry, make sure that buyers step in very strong. This candle right here was so strong. I cannot stress how strong it was. I don't know if you guys were in my live trading, but I'm like, guys, I love this candle. I like it too much, right? So right here is going to be the MSS model, right? Because buyers are gaining control after the sweep, right? How do you place multiple TPs? Just trim on the way up. So just sell a portion of your position as it keeps going higher. Yeah, you can. Your name is blanked out, but yeah, you can. Right, so now, after the MSS is forming, what you're going to be doing is entering off the inverse right here. Right, so your entry point, put here entry, right? Because of the IFEG, right? We're inversing this bearish fair value gap because buyers are stepping in. You're gonna place longs right here, okay? And once again, I had a mental stop loss. So usually when I have my mental stop losses, I have a 20-point stop loss. That's my go-to, right? And then your take profits will be TP1, 2, 3. Now, what do you guys let the trade do? You let the trade do its thing. Peep this, guys. Peep this. Peep this. Watch this. Watch this. Watch this. Boom. All take profits, one and done. Guys, it is so simple. So simple. Yeah. Yeah, and bro, if you guys don't believe me that I caught this, peep this. First and foremost, I did this all on live. So I was live trading the entire thing. Look at this. Look at this. I was live trading the entire thing, all on live, face cam, everything. Look at this. Let me see if this loads. All on live. Cause this entire trade, right? But if that's not enough, look at the alert real time. Look at the alert real time right here, right? So you guys can see right here, I ended up entering. Let me see. We entered NQ longs at 19,498 off the inverse once again, and we took profit, of course, at TP1, right? 65 points. I trimmed some off, meaning I took a portion of my profits out of the table, and I moved my stop loss to break even. Now PT2 hit 80 points. I sold some more off, moved my stop loss. PT3 hit for 140 points. I trimmed some off, moved my stop loss even higher, right? The reason I keep moving my stop loss, you guys might be wondering, is because I'm making the trade as risk-free as possible. Meaning, if the trade goes against me at any time, I will never go red off that trade because my stop loss is placed at the green. Meaning, if the trade goes against me, I'll get stopped out in the green, so I am not risking any profit at all, right? And then you guys can see right here, final PT hit out for 155 points. You guys see right here, look at this, boom, and the trade just kept going, guys. A 200-point trade. Look at this. And guys, you guys see the classes that I do every single day. I don't change anything up. I don't explain it any different. It does not matter. It's like, okay, let me ask you guys in the chat. Did this breakdown right here make sense? Did this breakdown right here make sense to you guys? Was it clear? Was it good? Was it confusing? Let me know. If you guys have any questions, let me know. Can we trade smaller fair value gap candles? Have a minimum of 40 points. Yeah, have a minimum of 40 points. Yes, sir. Bet. Got some crazy late fill on this. Yeah, I'm not gonna lie. Price did move a little bit fast. I got lucky that I got a good fill. I thought a fair value gap is 3 consecutive candles. No. It's just a big candle with a lot of imbalances. It doesn't have to be consecutive. No, it doesn't. It could be just a big candle. It could be like a green candle, sell off candle, green candle again. It'll be a bearish fair value gap just because the middle candle is a selling candle, right? So if that candle is more than 40 points selling off, that's an imbalance right there, creating a fair value gap. So what I mean is like this. So let's say that okay, let's say for example this candle is green candle, this candle is red, and this candle is green. It will still be a bearish rally gap because the imbalance is inside of this second candle. So it does not have to be 3 consecutive candles. Nope, not at all. Okay, let me see. Hey, thank you guys. Wait, let me catch up with everything. Okay. I had 19,406 as another level on lower 15-minute time frame. Do you not consider it as a valid level? I'm not gonna lie, I didn't really look too far back because keep in mind, I found these levels on the 1 hour time frame, and on the 1 hour time frame, all I have is this low right here, right? So the reason I have this is because look at this. The market pushed up, went down, found the bottom, pushed even higher. So this bottom right here is drawn liquidity. Anything below, we really don't have anything other than some fair value gaps, which isn't a big deal. Right, so that's why the market took out drawn liquidity, and it just pushed up, right? And that's how I found the price target, or the setup. Let me see. Can you explain what percent you trim at PTs? Okay, for my first take profit, I trim half my contracts off. So if I'm in 10, I'll trim 5 and so on. And then as it goes higher, I'll just trim like 2 at a time or 1 at a time and so on. How can you see the points on the candle? It's really easy, guys. Click right here, the measuring tool right here. Measure from the complete bottom to the top. And the point system right here will be right here. At 143 versus 143, that's where the number will be at. So like this, for example. Look, 67 points, 49 points, and so on. That's how you do it. How many points for an ES fair value gap? 10 or more points. Anything 10 or more points, it'll be perfect. What's your contract size for that 200-point trade? I took 7. Usually I take 15, but I'm not going to lie. There was news at 10 in the morning, and I took this trade before 10 in the morning. Right, so if you guys look at this, we have 10 a.m. news. So I told everyone, because we took the trade beforehand, I'm like, guys, I'm going to size light just in case. Because look, we took the trade 10 minutes before the news came out. So I'm like, guys, I'm sizing light for now. I'm going to wait for the 10 a.m. news to come in. And if anything, I'll add more. right? And yeah, that's why I size 7 contracts, but I usually do 15. Let me see. How often do you have days where a 40-point fair value gap doesn't form? It's gonna be days where, okay, and honestly, not that often. Not that often, honestly. Of course, there's gonna be days where the market is extremely slow. And of course, you can't really trade anything off that. So regardless, it's gonna be saving you a ton of money, so you don't force out any trades. But if the market looks trendy, if the market has some really nice candles with volume in them, you can find a lot of fair value gaps. Like today, for example, today was pretty good. Might be a dumb question. Hey, bro, no question is a dumb question, bro. Just hit me with them. But can you use the same strat for crypto trading? Yeah, you can. Yeah. You can. You answered my questions as I go along. I love it here. Hey, bro, of course, man, of course. Wait, are you in the? Oh yeah, you are. You are in my server. I was about to say. Um, how do you determine liquidity points? Because you only marked out a few highs and lows. It's any. Okay, here. If anything, this can help you out. Hold on. Let me see. And by the way, guys, subscribe if you haven't, bro. Show some love to your boy. Anyways, it'll be drawn liquidity. Hold on. Because I don't want to go into debt. Because I'm not gonna lie, I have to go in a bit. Because I'm a little bit busy today. But if anything, this video right here would help you out. So it'll be this one. Let me see. Gold. Yeah, gold is 3+ points. Yeah. We don't talk about yesterday. We don't. I mean, we just got caught up in the chop. It sucks. You know what I mean? But guys, for those that don't know, guys, I was on a 1-month winning streak. 1 month every single day being a green day. I got out of that green month, out of that entire 1 month of being green, I think I made about 30,000 in payouts. Let me see. Yeah, it was 30,000. It's not that I even think. I know that I made 30,000. Yeah, right here. So in the whole 1 month winning streak, guys, I made 10,000 in payouts. But guys, yesterday the winning streak came to an end. I hate to be the one that says it, but it came to an end, guys. I knew my rules. I had to set up. I had a really good setup. I'm not even gonna lie to you guys. I had a setup. But the market the volume just died out of nowhere, and we got stopped out. Look at this. This is the chop I had to deal with, and I got stopped out. The setup looked good, right? Everything lined up. We set up liquidity, inverse fair value gap, drawn liquidity above, all that good stuff. But man, the volume died last second, and I got caught up in the chop, resulting in a losing trade. I hate to be one that says it, but man, hey, you know what that creates? That creates another 1 month winning streak that we're gonna form. So I'm not even stressed about it. Like today, for example, today was already a good way to start off the you know what I mean, the streak. 2 winning trades, 90 points and 200 points. So we'll take it. What were you saying earlier about position sizing? You said to remind you earlier. Oh, I already reviewed that. I did it in the stream during the live trading. You made that L back today, so it's all good. I know, bro. I know I made it back, and I'm super thankful, and for all that good stuff. But man, just I can't flex that I'm on a 1 month winning streak anymore. You know what I mean? Like it just sucks. I can't. How can you tell that little candle was a fair value gap? Really easy. Because first and foremost, if you measure the candle, it's a 40-point candle, right? So it's a 40-point candle, right? It's a 55-point candle actually, which is the valid fair value gap, and you would actually realize right here that we have a very, very small gap right here. Very small, but it still is a fair value gap with a little bit of imbalances. So it was just enough for me to take the trade, and it resulted in a nice winning trade, right? I mean, we dumped here, but I took profit by then. But yeah, man, guys, I know we made everything back today. I'm super thankful for that because we made a lot of money. The community won. I mean, look at the wins today, guys. Look at the wins today. Look how many people ended up making money today. I can scroll for days. All of this is today, guys. Look at this. All of these wins is all today. All of these wins. Today. 350, 2,000, 1,000. What is this, like 1, 2, 3, 4, 5, 6? About $8,000 off this trade. $1,000. All of this is today. So we made money today, and I'm thankful for that. I'm super thankful. But bro, it's just the fact that I can't flex that I'm on a 1 month winning streak. You know how good that felt throughout the entire month? You know how good that felt? I was like, man, like I'm the man, I'm the trader, you know what I mean? And then I get humbled. Yesterday I got humbled really bad. I'm $1,000 away from passing a 50K. David, what are we gonna do? Bro, I mean, just keep trading, my man. Size accordingly, size right, take the right trades. You'll get funded in no time, bro. Do I live trade Monday through Friday? Yes, sir, I do. Every single day at 10 in the morning, I do live trading on my YouTube and on my in my group. My bad. I don't do live trading here in the server though. I wish I could, but I'm only one person and I can only be in one call. But yeah, there it is. Let me see. Can you do a really quick explaining that? Explaining what? Explaining what, my man? Explaining what? Hey, thanks for all the great info. Can you use this for SPY? Yes. Okay, okay, okay. Look. If you're gonna use this for SPY, trade ES. You guys might not know this, but ES and SPY, they are the same exact thing. They're just two different markets. So SPY is a stock. And what's it called? Hold on. Let me see something. Okay, guys, SPY is a stock and ES is a future, right? They're the same exact thing. They move the same exact way, but the difference is that ES is 23. It's open 23 hours. So there's actually a secret here. If you guys swing trade SPY, there's a way to know what SPY is doing overnight by looking at the ES market. A lot of people don't know this. But yeah, because you guys know SPY is open from 9:30 to 4. Right? Yeah, 9:30 to 4. ES is open from 6 p.m. to 5 p.m. the next day. So it's open overnight. So if you guys are ever curious to see how your swing position is doing with your options, you guys can actually do that by charting ES, and you guys can look at it just like this. Right? So look at the SPY chart. Right? Like memorize this pattern. Right? Memorize this pattern. Let's go ahead and look at ES. Look at this. From 9:30, 2 red candles, 3 green candles up. Look at ES. At 9:30, hold on, let me delete this. 9:30, 2 red candles, 3 green candles up. It's the same exact thing, just two different markets. They move the same exact way, like to the cent. They move the same exact way. I don't know if you guys knew that, but it's a cool thing to know. Let me see. Or can I DM? Yeah, bro. DM me also. I got you. DM me. How to gap? It has to be 40 points. Yes, it has to be 40 or more points. It cannot be any less. 40 or more points. I was able to switch out of an in-person class to online, so now I'm free mornings, bro. Beautiful, bro. Beautiful. I hope we can keep we can keep making money, bro. Of course, you know me, bro. You know me. I got you guys as always. Is 10k the max profit you could take out at a time? No. I choose to take out 10k at a time. To take out 10k at a time. Am I offering a one-on-one mentorship? Yeah, here I'm gonna add you as a friend. I have very limited spots. I'm not gonna lie to you guys. I had spots opened, they filled out. Like there was a lot of demand. A lot of people bought it. I do not have any more spots, guys. I can probably squeeze in like 1 or 2 more people, but that's it. That's the most I can do, guys. That's the most I can do. But yeah, if anything, just DM me. I'll pick and choose who I want in the mentorship. You know what I mean? And then we go from there. Not even 39 points. Okay, 39 points. I'll consider. But anything lower than 39, no, I won't do it. Having trouble understanding the inverse rally gap from this morning. Can you measure it out again? Yeah, it was 40 points. Look at it. It'll be this one, right? This rally gap. You measure it out. 55 points. Or yeah, it was 55 points. Hold on. 55 points. So this gap right here, this small gap, is a fair value gap because it hasn't been filled yet. So that's why we inversed it. Would a 40 points still count for ES? No, because ES is different. ES moves differently. Look, if you look at the points from the same move up, right, it's going to be an 8-point move. So on ES, it's not 40 plus points, it's 10 plus points. So if you're looking for a fair value gap on ES, anything 10 points or more is going to be a valid one. What time is it? Okay, it's 5. How to say? It could have been today. Hey, bro, it happens, my man. It happens. No one has ever gone broke taking profits. How much can I take out on a 50k account? 2k per payout. The thing is, I do copy trading, so I request 2k per payout for 5 accounts at a time, which of course equates to what's it called? 5. It equates to 10k. My bad. Next is the 1-year streak, bro. I think it's possible. So do you do these streams Monday to Friday for free? Yeah, but look, on YouTube I do them for free, but they have a 2-minute delay. I do them over in my group with no delay and alerts included. Thanks for the great class as always. You're a great teacher and I appreciate you, man. Hey, bro, Condish, God bless you, bro. God bless you. Thank you for that. How do I overcome overtrading? Bro, just close the charts, bro. It's not that hard. It's more of a mental thing. I can't give you a strategy because, like, I mean, just keep yourself busy. Does this strat work with options? Yeah, it does. I'm a new sub, so mostly your trades are following ICTs. No, I don't really trade ICT. I mean, I do in a way because of the fair value gaps, but I've never watched an ICT mentorship. I've never watched an ICT video. So I can't really say I trade ICT, but I do. I would say so. Anyways. Make sure everything's looking good here. Okay. Now, it is. Yeah, I mean, it is in a way. I just don't consider ICT because I didn't learn from him. I kind of learned the strategy on my own in a way. But yeah, guys, I don't know if you guys have any more questions. But yeah, today's class was more of a like more practice rather than learning. Like explaining, more practice than explaining. You get what I'm saying? But hey, guys, to once again, for the people that want to check out more classes and all that stuff, guys, here's the YouTube link. Just go over to my YouTube, click on live right here, and you're gonna see all of my classes. Every class titled with whatever you guys are interested in. $10,000, $5,000, $20,000. Today was $7,000, and so on. Where would this recording be? It'll be right here. What do you? Let me see. What do you mean? Copy trading, is that recommended for bigger cash outs? Yeah. So copy trading means that you're okay. Pretty much what TradeAway does, or they have a feature, is that if you place one trade on one account, the system is gonna place it on every other account. So if you have 10 accounts and you place one trade on one account, it's gonna place it on the other 9. So if you make $100 times 10, that's $1,000 off a $100 trade. Shit. So if you make 4K profit in one day, you only get 2K out of it. Yeah, pretty much. Yeah. I mean, in one payout. So the other 2K that's remaining, it'll be for the next payout that you request. Pretty much. What is static versus rhythmic? No, it's static versus full. It's TradeAway versus rhythmic. Right, so it'll look like this. So the difference is, so first and foremost, right? Wait. Okay. First and foremost, by the way, guys, if you guys want to buy an Apex account, which is what I have, it's code Blastoise for 80% off. Do I have a free trial? Here, use code trial under the monthly premium. Apply a discount. Yeah, so for the people on my YouTube, if you guys want to go ahead and check out my premium, for the people in my YouTube, guys, click the first link in the description. Click on the monthly premium and type code trial like this. I misspelled it. Type code trial like that, and it'll give you guys a discount for the premium. All right, guys. But yeah, if you guys are interested in that. Anyways. So yeah, the difference is there's rhythmic and there's TradeAway. Always use TradeAway. Do not use rhythmic. I do not like rhythmic. At least for me. I like to use TradeAway. Now, the difference between a full and a static account is a static account does not have a trailing drawdown, but it has a very tight stop loss, right, which is 625. Now, with a 50K full, for example, you have a trailing drawdown, but you have no total drawdown in the account. So you have more of a drawdown on a 50K full, but it trails as you make profit. With the static, you have a very, very, very tight stop loss, right? But there's no trading drawdown. So you choose what you can do. How does making money on a funded account work? I want to get a funded account. I mean, you pretty much just make money while trading, and they'll pay you out. That's what it is. On which app can I trade? I'm from Canada for futures. Do Apex. Yeah, Apex does Canada. Apex allows Canada. Here it is. Actually, wait. Let me give you this link. It'll be a lot. You'll get the discount, the 80% off. So it'll be right here. Let me delete that everyone. I'm not trying to do that. Right here. Okay, bad. There you go. Let me see. Do you have to pass the account to get paid the first time? Yeah, you have to pass the account. Yeah. It's not that hard actually. It's really not all that hard. Wait. So they give you a stop loss on the funded? Yeah. So if you lose a certain amount, they take away that account for you. Let me see. What is the difference between market CME data and professional? Okay. Click on professional. If TradeAway ever asks you if it's professional or non-professional, click non-professional. That's the one that you have to click. I have two of the 300. Well, that's amazing. How many contracts are you risking with a 300K account? Okay, let's do the math. On a 300K account, you have a $7,500 drawdown. So let's divide 7,500 divided by 7 losing trades in a row. You're looking to be risking anywhere from $1,000 per trade. Now with $1,000 per trade, let me go ahead and pull this up real quick. 1 second. Okay, so 7,000 or 1,100 per trade you're risking. You're looking at a 20-point usual stop loss, which will look like this. Which your risk reward would be 40 points, right? Because you're trading a 1 to 2 risk reward. To be risking anywhere from 1,000 points, you should be risking 13 con. No, wait. You should be risking about 25. I would do 25 on a 300k account. I would do 25 micros, 25 micros. So dream or big dreamer on a 300k account, you're looking to risk $1,000 per trade with 25 micros, and you're looking at a $2,000 win per trade. That's what I would do. That's the math behind it. That's what I would do. Oh yeah, I mean the overall drawdown. Yeah, the overall drawdown. And for trading, can I link interactive brokers to TradingView? Can you? I think you. I don't think you can. I don't think they allow it. I don't think they allow it. Yeah, the profit goes 20,000. That is insane. I would never do that. I would never. I like my 50k accounts. Cause bro, making 20,000 it must be such a headache, bro. I'm good off that. When I try to create a TradingView account, it won't let me because I have a NinjaTrader account. Do you know how to fix this? Not really. Just buy. I would say just buy a funded account. They make the account for you. So all you have to do is log in. They'll give you the details behind it. But yeah, guys, one more time, guys. If you are interested in joining the community or in seeing the live trades for free or whatever, guys, check out the YouTube. Subscribe if you want, so you can get the notifications and all that stuff. It's all there. The link in the description, all that good stuff, guys. All that good stuff. Is there a video on how to copy trade? Yeah. Here. 1 second. Here. This is what I do to get the payouts, the 10k payouts, with copy trading. So it'll be this one. The Apex is wait. Run account. I want to put the money in. Oh yeah. No. They don't. TradingView doesn't have interactive brokers. They don't have it. The hell? Wait. David, your strategy's so easy, bro. Hey, bro. Thank you. Bro, your profile picture, bro. Bro, what the hell? You think I'm making it by the 14th? Wait, why are you paying? What are you? $76. Wait, what is that for? Is that Apex? Oh, that's another prop firm. By the 14th, bro. Yeah, what? Bro, it doesn't even take a week to get funded. It takes like a week max. I have a question. How many micro contracts should I have for a 50k account? Do 9 contracts. 9 contracts. That's what I would do. 9 contracts. Nine contracts is my go-to for a 50k account. Do you have to get approved to get funded? Yeah, you do. You have to pass the test, bro. Yeah, that's just insane, bro. Yeah, you have to pass the test. Yeah. But it's you just have to hit a profit goal. They tell you right here. So you have to make, for example, for a 50k account, if you make $3,000, they'll fund you. They'll fund you with 50k. Oh, they do have it. The thing is, I've never used it, so I don't know how it works. I can't really tell you because hey, what's up, Fernie? What's going on, my man? What's up? Making 20k is intense. Pass both in a day. Lowering my risk to keep the accounts. The sell with Apex was too good to pass up on. I'm aggressive with the challenges. I get what you're saying. I mean, with 20k, yeah, I would be aggressive too. Is 100k account too much for a newbie? Yeah, do 25k. 25k is fair enough. You know what I mean? It's the same profit goal as a drawdown, so it's a hit or miss, I would say. But do you have another app for Canada without Apex? For futures, I don't know. I think Tradeovate lets you. You can do Tradeovate. For a live account, do Tradeovate. So your strategy is based off drawn liquidity and fair value gaps and MSS. Yes. So drawn liquidity, MSS, fair value gaps, and inverse fair value gaps. These 4 things is what I use every day to trade my strategy. Yes, sir. Am I trading tomorrow? Probably. Yeah, most likely. Yeah. All right, guys. Okay, I can't stay up too long to answer too many questions because I have to go do something. But all right, guys, I'm gonna go ahead and call it a class for today. I might do one tomorrow. You can copy trade evals. Yes, you can. Isn't Tradeovate only US? No, it's worldwide. Yeah, it is worldwide. All right, guys, I'm gonna go ahead and call it a class for today. It's gonna be recorded, so I'm gonna post the recording right now. But I have to go do something. So it was a quick breakdown today. All that good stuff with the breakdowns, the trades, the explanations, all that good stuff. All right, guys. But yeah, I have to go because I have to go do something. I'm not gonna lie to you guys. But alright, I'll see you guys tomorrow. If I do a class tomorrow, I'll do. If I get a winning trade tomorrow, I'll do it. All right, guys, stay safe, guys. I'll see you guys tomorrow. Peace out, guys. Peace out. Peace out. Peace out. Peace out, guys.